What's good, everybody? Happy Friday. Welcome to your market update. We are going to cover it today. The markets broke their losing streak, right? So we had a finish on the day here. It was actually somewhat strong on the surface, but we're going to dig a little bit deeper. We're going to show you why today's market rally is not the way you want it, right? This is not a good sign. We're going to dig a little deeper, and by the time we're done, hopefully you understand exactly why the markets did what they did today and why I'm a little concerned about the way they did it. So we're going to take a day off from the trade news, by the way. We're not going to really cover anything from all that trade war nonsense. Don't make any mistakes about it. It is an official trade war. So they're not going to use the word. They're never going to say it. But it is officially a trade war at this point when another country is willing to say it. So we're going to take the day off from that. There's a lot going back and forth on that. Basically, let's pull up the charts here. There you go. So we've got, and this is all, we're going to update this. We'll make this look a little smoother soon, so stay tuned for that. But basically, if we take a look, the Dow is on the screen there. I'll zoom in a little bit so you can see it. Broke its 8-day losing streak. Look, all throughout here, real slow, real cautious. Now, if you have to have a decline, which you're going to see, your investments are going to go down, they're going to go up. Different categories of your investments are going to go down, some are going to go up. But if you have to see it go down, don't you kind of want to see it go down like this? A very slow and sort of almost non-led way of going lower versus, go all the way over here by my head, see how rapid that was, 10% in just a couple days? That's pretty scary. I mean, people don't like to see that. We can handle these little pullbacks here, and traders call all of this, see this here, and then of course the last 8 days, traders call that a profit-taking pullback, meaning it's just people getting out little by little. There's no fear. It's just people saying, I've got a little profit in, whatever position it may be, and they're just selling off little by little. So nothing big to talk about there. What I don't like about the rally today, both in the S&P, in the Dow, is it all came from the price of oil. You never want one reason for the markets being higher, right? And so tech has been a focus, like tech has just been just nonstop. You don't want to invest in the one thing that is holding the markets higher because all good things come to an end, right? So in this one day, the stock market was higher, but it was almost all due to oil. You had stocks like Exxon Mobil higher by 2.25%, Chevron higher on the day. If we go over to the actual price of oil, my screen changed. There we go. The price of oil shot up. Well, now it's up 5.8%. It was up about 4.75% by the close. And so what happened there is OPEC came out. We talked about this all week. Nothing was going to happen with the price of oil until Friday. So if we go back Monday, Tuesday, Wednesday, Thursday, look at this back and forth. If you follow candlesticks. Oh, by the way, if you don't, we're going to do a class for our customers on what these mean, specifically going over some of these details for those of you that are also traders. We have a lot of customers that are also traders in the short term, so we'll cover some of that for you. No worries, but take a look at today. Huge move because of what OPEC said. Yeah, they're going to increase production, but then they started saying stuff that just made you go, what? Like, what are you doing? Like, are you making more oil or are you not? Well, they're smart guys. They didn't want to say, we're going to increase production and then just leave it at that. So what they said was, we're going to allow for the increase in the cap of our production, and we're also going to leave so many millions of barrels, I believe it was 1.2 million barrels a day, off the market so that we have access to that when we need it. They also said that the individual countries would be able to do sort of what they want to ramp up production. And so all the analysts, it was like, well, okay, wait, so more oil, less oil? We don't know. Because they were so vague, it led everybody to believe they don't really have the ducks in a row here. It's going to be a while before they get going. Analysts predicted that it should be about an increase of only 600,000 barrels a day, which was lower than what they previously expected. And it's just like earnings. When you watch a stock that does better on earnings because it lost less than expected, isn't that bad news? Wall Street always looks at it as good news. A good example today will be CarMax. We'll go over that in just a minute. So that is oil, and what that did is, in the energy sector, if you follow ETFs, you got energy ETFs like XLE. That is an energy space ETF. We talk about the oil explorers. That's XOP. That's not really what it's called. That's what I call it. 3% on that one. And then things like the oil service companies, the companies that provide the equipment to the oil drillers and things like that, they did well today also, about 3.3%. All that's fine. I'm not arguing with the price of oil. I'm just saying you don't like to see the market higher because of that. What do we always say in here? If you want the markets to be solidly higher and have no questions whether it's going to stay or not, you need the banks and you need the tech stocks. Today, the banks lost 0.5%. Nobody's talking about this, but the banks are incredibly weak right now. I mean, it is ridiculous. If you look at this chart, the markets have been attempting to move higher, and the banks are like, no, 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 not going to do it. You do not want to see that. And so in my opinion, there is some weakness starting to brew little by little, and so I'll hold tight to my after summer prediction. We'll see what happens. I'm excited. We'll see if it works out. So then we go over to tech stocks. Tech stocks today sold off about 0.5% by the end of the day. Not a big deal. Now that doesn't mean that the markets can't go higher. It just means there's not anything of significance holding that market up. And I would say that the tech stocks falling today is still profit taking. I wouldn't worry about that at all. So if you're a short-term trader, hopefully you took some profits on that as well. But if I just jump over to the Nasdaq, look, it had a great run there. Every blip that you see is one day. It's been doing well. It's normal. That sort of breathing that we talk about with stocks, very much normal to see that happen there. Consumer staples, that'll be our focus sector of the day. Consumer staples closed at their highs of the day. They've not done well, but, I'm sorry, highs of the week they closed at. They were able to push back up there and hit new highs, and here is why. So I'm just trying something here. Bear with me if you're not interested in this. You've got the XLP, which is an ETF that does all consumer staples. All right, so yesterday, all right, let me just write first. So yesterday we covered the semiconductors. Today we're covering consumer staples, right? The things that you have to have no matter what the market does or no matter what the economy does. Now, remember how we talked about the semiconductors being broken down with Intel, Taiwan Semiconductors, Micron, and NVIDIA sort of dominating the big bulk of it. Well, in the XLP, let's try it a little different. If this is the pie and all of the stocks are inside of it, let's use a different color here. Maybe we'll use blue. All of the different stocks that are inside of it make up this pie. Well, let's say this is half, here's a quarter, and then right about in here, all of this is Procter & Gamble. So Procter & Gamble makes up almost 13% of the XLP here. And let's go back to the charts, sorry. Procter & Gamble had a good day of about 1.3%. Now before I go back over there, let's take a look at the other names. Pepsi. Look at Pepsi making a little recovery off the lows here. So this has been going on for a couple weeks, but this week it continued all the way back towards the 200-day moving average. Pepsi makes up 9.5%. And then you got Costco, which broke out to new highs today and has been at new highs ever since the bigger trend breakout, if you follow that sort of thing. So if we can go back for a second, you've got Procter & Gamble, you've got Pepsi, right? Well, we probably should have done a different color, but you get the point. Pepsi, and then you've got Costco, almost making up 1/4 of the entire XLP. Those three names basically dominating this quadrant in here. So very important that when these names do well, you're going to see that sector do well, or at least this ETF. Other ETFs break it down a little bit differently, but here you've got 12.5%, 9.5%, and then Costco is 5%, almost 5%. So big bulk of everything going on in there. I'm just trying to use one thing a day that we could sort of expand on, do a little bit more education. Bottom line is, if you have the consumer staple stocks, you're starting to see a little bit of a rebound. You gotta like that. That's not too bad. Let's talk about some stocks on the move here. You got CarMax in the news today. I don't know if you saw shares of CarMax blasted off almost 13% to finish the day. Here's when we talked about this a minute ago. The company reported earnings that were way better than expected. Everybody blown away by the actual earnings. And then the question comes up, how did you make the earnings, right? Where did it come from? Because CarMax said, hey, we have a lot in earnings for the last quarter, but the number of cars that we sold is going down. They've been on this trend where they're selling less and less cars. So this is how it breaks down. They sold less cars than they did this time last year, but they sold more cars than what Wall Street expected. So even though they sold less, Wall Street thought they would sell even less. Have I confused you yet? So because of that, first of all, stock starts moving higher. Then we look at their earnings and we find out most of the money that they made, I wrote it down. So their tax rate was 37.4%. So you guys say like corporations get away with paying no tax. Some of them do. But they paid 37.4% was their tax rate. It is now 25.3% thanks to Trump's tax plan. Well, because of that, of course they made a ton of money. It was all because of Trump. It wasn't because they sold more cars or something. So Wall Street was like, damn, you made all this extra money. Stock price shooting higher. That's what you have with CarMax today. Not to make a big story out of it there, but you always got to look a little bit further into this stuff. Looking a little further into BlackBerry. There's Kevin. Kevin wanted me to look at BlackBerry. It wasn't actually on my radar. It's not one that's even on my list, actually. Kevin pointed it out to us, one of our viewers there, that it had fallen quite a bit today. I happened to actually catch on TV the CEO talking on Bloomberg. He was on Bloomberg. He was sort of frustrated in a very nice way that the stock was lower today. He said that the company is financially safe. Those were I wrote down the quotes they said. Company is financially safe. They just now have to make it interesting. What did we say? Yeah, he said the company is financially safe. Now we need to make it interesting because, see, almost 100% of what these guys do is licensing. Actually, the growth was 100% as well. So year over year, the growth in their licensing department, ridiculous. That's huge growth. Everything great there. You know, the problem is their revenue fell, and people were like, uh-oh, here we go again, right? Here we go. BlackBerry's going to start losing more and more and more and more. The profit's going to get a little tighter, and eventually they're going to be in trouble. The CEO could not disagree more. So if that helps you in any way, I mean, hopefully that helps you, but I know you have a big portion of your portfolio in that. You got to take the good with the bad there. If that would have shot up 8%, what would you be saying today? You'd be going crazy. So in the long run, you've got a big chunk of your money in one particular stock. You are susceptible to things like this. That will happen. Lastly, emerging markets. One of our holdings here, VWO, in some of our portfolios, pointing this one out for David if you're watching. VWO has been a slow and steady drip. Actually, if we just zoom in, you can kind of see it's the same thing we talked about. If you have to watch something pull back, do you want to see it pull back like this? Or do you want to see a slow and steady one? In my opinion, this is starting to ramp up and get a little more exciting. Now, if you want to use VWO or EEM, that's another one, also emerging markets. They're just a little bit weak right now. For us, remember, in our portfolios, it's speed. How's the speed working for us? This guy's dialed in, and so there'll be times where it does this, and then there'll be times like going back into November and December where all things look good. I don't really have anything to add to that. Of course, when we do our client update, we will go through everything and update you along the way. And lastly, if you're still with me, are you here? If you're one of our customers, it just came in today. Let me get rid of this thing here. If you're one of our customers, I told you I was making something sort of silly for for you guys that I want to send out to any customer that wants it. You send me an email. With the markets falling, they will fall. Everything is going to fall at some point. I need you to know. I do these classes where I say all the time not to be scared and exactly what you're positioned in. Well, now I want you to have this. It's really sort of silly. I told you it was silly, but it's a simple, I call it the drop cloth, right? And all it says, I hope you can see it, it says ain't sweating it. The markets recover 100% of all declines 100% of the time. I want you to remember this. And when you get nervous and this market's falling, it should be like, oh, girl, the market's falling. But then you look at it and go, yeah, that's right. If I have the right investments, 100% of the time, I will recover. It's going to be fine. So I have boxes of this stuff. I want to send it to you guys in a little envelope or something. My daughter's agreed to stay home all weekend. So if you're one of our customers and you're a little nervous, you go, damn, the market's fallen 8 days, that bothers me. Well, I want you to have this just as something to think about. I told you it was corny, but it's one of those things that put it on your oven, like when you're cooking or something. Put it on, use it as in your bathroom as a towel rack. Just something to see when the markets get scary, and I promise you they will get very scary. when they do get very scary, I want you to see something. I want you to be able to touch something. I don't want you to see me answering an email or talking to you on these videos and trying to coach you through it. I want you to feel it, right? I want you to know that that's what it is. So I told you, it was sort of a funny thing that I thought about a couple weeks ago, and I'm like, you know what? People need to have that. That's just one of those sort of oddball things that it'll come to that. So send me an email or support@jazzwealth. Either way, we'll all get it. And just make sure your address is the address on file that we have for you, and I'd be more than happy to send you one. So I'm going to keep talking about it. I'm going to hang them on the wall. When the markets are scary, I'm going to use them. So we'll keep going from there. Otherwise, have a great weekend, guys. I hope you enjoy. If there's anything I can help you with, you know where to find me. If I've helped you in some way, hit the subscribe button at the very least. We've got so many cool things coming to this update. I've got I'm just so much to work on. So more work for me this weekend. If you're one of our customers, you have a question, I'll be around, in and out all weekend. Enjoy. See ya.